to teach you a very exciting phase of the Autochartist family here. This new program, or this launch, is a great addition to the already successful chart patterns and Fibonacci patterns. So this is pretty exciting for me. It's the first time I'm doing this webinar, and hopefully we'll get a lot out of it as we move forward. Okay, today I'm going to start with the, as I always do, with the Autochartist disclaimer. It reads that Autochartist service includes chart pattern identification in respect. Hang on a second here. I have something in front of my chart here. Okay, there we go. The Autochartist service includes chart pattern identification in respect of foreign currencies, commodities, equities, and stocks. There are potential risks relating to investing and trading. You must be aware of such risks and familiarize yourself in regard to such risks and to seek independent advice relating thereto. You should not trade with money that you cannot afford to lose. The Autochartist service and its content should not be construed as a solicitation to invest and or trade. You should seek independent advice in this regard. Past performance is not indicative of future performance. No representation is being made that any result discussed within the service and its related media content will be achieved. All opinions, news, research, analysis, prices, or other information is provided as general market commentary and not as investment advice. Autochartist MDO software, their members, shareholders, employees, agents, representatives, and resellers do not warrant the completeness, accuracy, or timeliness of the information supplied, and they shall not be liable for any loss or damages, consequential or otherwise, which may arise from the use or reliance of the Autochartist service and its content. Okay, sorry about that little glitch there. I'm also operating with one contact lens. It's one of the, I'm a victim of a live broadcast, and it kind of just popped out. So bear with me. My reading sounds a little slow. Anyway, we're going to start out by saying that Autochartist key levels identify important price levels and signals users when prices approach or break through support or resistance. This is really key because you're going to have a choice as the markets are moving, whether you're approaching a market, so you're going to have a chance to gear up and have plenty of time to decide whether this area we're approaching is going to become support or resistance, or if we're going to have a breakout through the area to the upside or to the downside. And that means that as a trader, you're going to have to know what's going to help you determine whether a market's going to break out or break down. And that means that you should have some kind of indication as to how the markets are moving. You know, what kind of momentum is in the market, what time of day is being traded, is there a report coming out, things like that. Autochartist can get you into the area, and it can identify the area that's going to be a very key area where supply and demand is going to show up, and where traders are likely to show up, or what I like to call areas of interest. So it's going to take you into that area and pinpoint an area that is going to be an area of concern for many traders. Because you got to remember, when you're looking at these markets, that there's thousands of eyes looking at the market also. So you're getting a good jump on the rest of the traders, because Autochartist in the Key Levels program will identify these programs well ahead of time to give you an opportunity to, again, as I said, prepare for something to take place. And it's really important that when a market does reach a support or resistance area, that you know how to trade it. And as I mentioned before, time of day has a lot to do with whether a pattern is going to break out, whether a report's coming out, things like that. If you're certainly trading on a holiday or in the middle of a session, maybe the U.S. lunchtime or European lunchtime for foreign currency, you're certainly not going to get the movement that you get when you trade in the morning or at the close, or when you have an overlap between the European, London, and the U.S. market. So it's important that you realize some of the benefits and also some of the limitations of breakout trading. It's not something unique to Autochartist, but it's unique to any kind of breakout or momentum method, that you need to have momentum and volatility behind the move to make these patterns work. Okay, so I also want to add that have you ever bought a stock or watched it decline in price and then yearned to sell out for what you paid for it? Or have you ever bought a stock or sold a stock and watched it go up, and then you wish that you had the opportunity to buy it again? Well, you're not alone, because these are the common human reactions that show up on the stock charts that create the support and resistance. So you're going to see that when you do get support and resistance lines, or horizontal levels as some call them, or as Autochartist identifies them as key levels, that these are actually points put in by traders based on supply and demand, or simply pure emotion. And that's really what we're dealing with right now. Both of these types of signals, the breakout and the approaches trade, the breakout again is a move through a resistance level or through support, and approaches is an area where the market is moving up towards a resistance point or down towards support. They're extremely valuable in helping traders find actionable trade opportunities as they are delivered in real time as they occur. So again, an actionable trading opportunity means that as the market is moving towards a price, you can take action by going against the trend. Or as the market's breaking out above resistance or support, you can take action by going with the moves. So it's real critical that these prices, these signals that you're getting from Autochartist are not, you're not going to sit and watch for a while. That usually there's going to be an impact on the market rather quickly. You'll have enough time to gather your resources and get everything ready to trade. That's the beauty part of it. But you're not going to have to sit and linger all day waiting for something to happen. These are fairly quick moves. It's a very good program in identifying what's happening now. And again, depending on the time periods you pick, you're going to have time to get ready for the move, and except that, as I said, you're not going to wait and linger all day for something to happen. Usually there's activity on both sides. You'll see that there's activity, markets, plenty of markets that are approaching levels, and there's also plenty of markets that are ready to break out. That's important to know too, and that's one of the key features. Okay, now we've described this as a clever tool because it skillfully assists traders to trade impassively and to make informed decisions around the existence of psychological barriers and key levels. Is aimed at traders who need a quick overview. Like I said, you're not going to have to wait for things to develop. These signals pop up, and it usually means the markets are moving. Okay, and that's what you want. You want that volatility and momentum to help you out. Okay, now to make an informed decision means that you have a certain skill set developed as a trader. Okay, it's not an automated system where it's telling you to buy and sell and things like that. It's an automatic pattern identification program, but you're going to still have to know how to enter the market, whether you want to use limit orders or stop orders, whether you want to wait for breakouts and trade retests. Those are all things that have to be decided. Your strategy has to be known, and especially your exit and the risks you want to take on the trade as far as your position sizing. All those things should be considered before moving into the marketplace. Okay, now we mentioned these psychological barriers because I said before that human nature puts in these support and resistance points. Sometimes it's done because traders become fearful or they hear news coming out and the market just stops in one direction and goes the other way. You see that a lot in the stock market recently because of the situation in Europe. We've have what we call here as the technicians and traders call a headline-driven market. So you're really getting changes and turns without warning. So you're seeing psychological reactions. Traders are getting out first rather than asking questions as to where they're at in the marketplace, what the price is. Other times, support and resistance or key levels are put in because of supply and demand. So you can see that it may be an oversupply of a particular product or selling pressure will put in the top, where demand at a certain area will put in the bottom. A good example, if you want to learn about how supply and demand is working, is watch a market like the Euro-Swiss, okay? Because in that market we know that the Swiss National Bank has pegged the price at 120. So you can see that when the market approaches 120, they defend that area as support, and on the upside, we've seen some limited gains. If you want to also see it, watch the dollar-yen, where you see that every time the dollar-yen gets weak, that the Bank of Japan steps in to defend its currency, to weaken its currency. So you can see how the forces of supply and demand work in those markets to put in these points and these key, that's how these key levels are created. So it's important to know that. All right, so I've talked a little bit here, and I just wanted to point out this word here, skillfully. As an American, I have a problem with just one L, and I've searched all over the dictionary for it. And anyway, I just thought I'd point that out, that some people will see this as say he spelled it wrong. Other people will say it's spelled right, but it keeps popping up on my WordPress as being spelled wrong. But anyway, I just thought I'd calm down a little bit and slow things down a little bit and point that out because I thought it was kind of funny. And looking at it right now, it always looks funny to me, but I know it's spelled right, so we'll move on. Okay, here's the first question. And this will see if you have a good grasp of what I was talking about, is what puts in upside breakouts or downside breakouts, or what causes momentum. The question is, why do you think a breakout to the upside takes place? It's number one, do you think there's more sellers than buyers? Do you think there's more buyers than sellers? Do you think there's sell stops? Or do you think there's buy stops? Okay, we're really looking for the best answer, not really the correct answer. So yeah, it looks like a large percentage say more buyers than sellers. That's right. Now, whether they were buyers to get long or whether they were buy stops, we're not too concerned at this point. As long as you know how buys and sells work and supply and demand work, it's real critical. You know, that's a basic concept. And because of the simplicity of working with the key levels, you want to try to keep everything as simple as possible, because it is, if you look at it, a straight line across the page, a horizontal line. So it is simple, but it relies on your skill sets as a trader. It relies on what tools you use to read how this market's going to go through. Now, if you trade equities, you may use a level 2 indicator, which is going to show you the numbers of traders on the bid and the number of traders on the offer. And a lot of traders use that in conjunction with the charts. And the reason why you want to do that is because if you think about it, a level 2, or the size of the trade being printed, or the tape as some people call it, that actually prints first and then the chart prints second. So if you're studying and you have the skill set and the patience to watch what's going on in terms of the real market, the bids and the offers and the actual trades, that'll give you an edge over those traders that are simply watching the chart. You'll get a little jump on them. Also, if you want to know, that high-frequency traders and these algo traders use that information on supply and demand, or the bids and offers, to get a jump on individuals who are still button pushing. So just so you know, they're not, nobody has really a secret formula. All they're looking for is the market to sway one side or the other, and that's either on the bid or on the offer. So when you look at a horizontal chart pattern, you're really looking at a battle line, something that's been drawn on a chart where you're going to have, as I said before, an area of interest. You're going to have this battle between the buyers and the sellers. Okay, so breakout trading, for example, it's been described as one of the oldest technical analysis trading methodologies in existence, and it's probably the most successful also because people like breakouts. And you remember that when you get a market in a trading range, even if it's just one bar or one price or one horizontal line, it's like a battleground. It's where the buyers and sellers are warring, and somebody's trying to exert their dominance. And that's what's printing, that's what's making this horizontal line. And it may have been in the past that this line was touched 4, 5, 6, 7 times, but then eventually it it broke through, and that's because that one side won. And if you're looking at, for example, a resistance breakout, you want to make sure that there's enough traders on the bid to push it through, and you want to see momentum. And momentum is what makes everybody a genius. You can have the greatest patterns in the world, but if you're not trading it along with somebody who has some size, somebody who's bigger than you, your program or your system or your trading methodology is probably not going to work. So a lot of people don't realize that if you're trading as a retail customer, your 5 or 10 lot in a Forex market, or maybe a 500 or 1,000 share order in equities, that's small compared to some of the funds and institutions that come in. So it's basically you need those guys to push the market through. So once you kind of get a program like Autochartist to identify the area where you want to do your battles, and you place your orders on breakouts, you want to hope that somebody comes up behind you and pushes that market through, scares the shorts out so that you get a nice quick pop on a short covering rally. Maybe you'll get some fresh buying, maybe you'll get some news. But that's how you want to see what you want to see happen. And the benefit of this program is that the areas are identified, so all you have to do is wait for this momentum or these big buyers to show up. If they don't show up, you don't have to take the trade or the pattern, or you may have to take a different approach. And if they do, just have to be prepared to move forward. Now, these key levels of support and resistance clearly are measured over periods of time and are displayed horizontally on a graph. I'll be showing you some graphs in a minute. And again, that's what you want. You want clarity when you're looking at a chart pattern. So then the clarity leads to conviction. Okay, when I work with floor traders, when they're popular. Now I work with, of course, the electronic traders. But the floor traders used to always say, because they were focused so much on watching just the bids and the offers, they used to say, tell it to me with clarity and conviction, and then they'll decide if they like the trade or not. But they wanted to hear that air of confidence in my voice. So when I was looking at patterns, I want to make sure that it's clear, that it doesn't have a lot of noise in it. Again, if you remember, from your chart pattern experience with Autochartist, there's clarity and there's uniformity. Well, that's what you want to see in a horizontal pattern also. You want to make sure that when you're buying a breakout to the upside, that there's nothing standing in the way, old tops, old bottoms. You want to be aware of your environment. So again, it's a very good tool for identifying where things are going to take place, but you have to be aware of what's going on around you also, so that you're not running into another resistance point or a retracement area. That you want to see a clean area, a clean breakout. And those are the types of patterns that take place, and those are the ones that lead to the strong moves into the Autochartist target zone. the ones that what I call the heatless trade, the one that doesn't read trade sign to you, the one that keeps